Is this a conspiracy theory?
Might raise income tax.
The other big word, recession.
The UK economy is under incredible strain. It's been a cornerstone of global influence for centuries, but these days it feels like it's been stuck in a rut. Austerity, pandemics, energy crises, these aren't just buzzwords. They're literally the reality that's shaping an economy that's been stretched to its absolute limit. But to fully understand why the economy feels so broken, we need to start with a simple question. What exactly went wrong? And how do we navigate ourselves out of this mess? Let's take a look and unpack the story. First, we need to look at where all this began. If we rewind all the way back to 2008, the financial crisis.
Apple's up more than 6% right now. Google about 3%, but Dell, Intel, Research Motion, and Microsoft are all to the upside. Look how strong.
Did not disappoint. 400 points higher. Yes, indeed. The markets roar higher last 30 minutes of trading as volatility once again.
Should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Do not take your money out. Bear Stearns is not in trouble. Don't move your money from Bear. That's just being silly.
Bear Stearns was in a death spiral, and the Fed brokered its sale.
The worst financial crisis in modern times.
Down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this
Down
morning.
by between 3
We're
and
down
4.5%.
16%. We read everywhere, essentially.
The stock market is now
We're
down
down
to 16%.
When the financial crisis occurred, the UK's productivity growth, basically how much value we get out of each hour of work, started to slow down. That might sound pretty abstract, but it's a fairly big deal. When productivity stalls, wages, they stagnate, businesses struggle to grow, and the whole economy starts to feel like it's running on fumes. Fast forward to 2016, in comes Brexit. Now, whatever your views may be on leaving the EU, it's undeniable the process created a lot of uncertainty. Due to that uncertainty, businesses, they held back on investments. International firms stopped investing into the UK. Trade with other countries became far trickier. And just as the economy was doing its best to recover from the financial crisis, it took another hit, and we started seeing the effects immediately. Both growth and efficiency took a noticeable dip. Fast forward to late 2019, 2020, COVID. The government had to ultimately spend close to £400 billion to keep things afloat. Being an unprecedented crisis, borrowing was the only option. And at the time, all that borrowing seemed manageable because interest rates were at historic lows. But as we'll see, that doesn't last very long. Another blow to the economy, the energy crisis. The war in Ukraine sent energy prices through the roof, and suddenly households were facing astronomical heating bills. To ease the burden, the government stepped in again, adding even more to national debt. And it's at this point, with this combination of factors, that things really started to unravel. Interest rates began to climb fast. Suddenly, all of that borrowing the UK had done became much, much more expensive to manage. Here's another fairly sobering stat. The cost of servicing the UK's current debt has jumped from £40 billion a year to £100 billion a year. That increase from 40 to 100, that jump is equivalent to our entire defence budget. And to top it all off, while all of this borrowing was happening, the economy wasn't growing fast enough to keep up. Since the pandemic, the UK has barely expanded economically. In fact, in most major advanced economies, only Germany has grown less. But unlike Germany, the UK is spending a much higher share of its GDP just to pay off its debt. Then there's the workforce. Since the pandemic, about 1 million people have left the labour market. Some have retired early, while others are dealing with long-term health issues, with most, if not all of them, being stuck on NHS waiting lists. That's 1 million fewer people working, earning and contributing to the UK economy, and that's a huge problem. This decline in labour participation is what economists call a British problem. While other countries saw their workforces bounce back post-pandemic, we went in the opposite direction, and that's a lot of untapped potential and a massive hit to the economy. So where do we go from here? Well, growing the economy seems to be the obvious answer, but that's easier said than done. To grow, we need to make the economy more productive, which doesn't just mean working harder, it means working smarter. It's about investing in the right technologies, improving infrastructure, investing in people, investing in their skills, and creating the right opportunities for everyone to contribute to the economy and make every hour count. We also need to address the workforce issue. That means fixing the NHS backlog, providing support to people with long-term health issues, and making it easier for people to return back to work. Now, these aren't quick fixes, but they're essential if we want the economy to get back on track. It's quite a fine-tuned balance the government's facing, balancing debt, fixing public services, and somehow reigniting growth. The UK economy might feel quite broken right now, but it's not beyond repair. If we make the right choices, there's every chance we can turn things around. But the question is, are we ready to make those choices?